Hello again, everybody, and welcome along to our interview with the ECBC. Those of you paying attention might have just noticed that I've had a haircut in the last 10 seconds or so, miracles of modern technology. But I'm delighted to have with me Luca Berthelot, Secretary General, European Covered Bond Council, Morten Bachmann-Nielsen, Deputy Chairman, European Covered Bond Council and Head of ALM and Investor Relations at NewCredit, and Boudewijn Dirk, Chairman, European Covered Bond Council and Managing Director of Money Investments. Well, gentlemen, great to have you with us this morning. How are you all? The three ECBC amigos. I guess we'd all love to have preferred to be with each other in person this year, but this is the next best thing, right? So, Luca, let's start with you. So for the last few years, the ECBC has been working hard on its covered bond directive. Now that is done and dusted, apart from a few countries transposing it a bit slowly, what's the new priority?
Well, we are still in the middle of the fun. Toby, most of the countries, as you said, are implementing the masterpiece of the covered bond directive, which has been approved by the European Parliament, 1 age ago, because it was right before the lockdown. So we were living in a different world when the covered bond directive has been approved. In the meantime, every single country have rushed to implement the directive. We have a large group of countries which have implemented the directive before the summer break, before the first deadline. And then I would expect a large group of other countries implementing this between October and November. We had just had yesterday a steering committee where there was an update of every single country on the state of play. And we see that, we are expecting in the coming weeks several countries to implement the directive on national laws. Well, the Covered Bond Council and the Covered Bond product is becoming global. We see that more and more countries outside of Europe are asking for covered bond advice. We see Indonesia, India, Malaysia, and also Central Asian countries are looking at covered bonds like Kazakhstan. China is thinking about covered bonds. And then we have countries with already a covered bond framework or an active market looking at implementing a national law for being compliant with the covered bond directive, like Japan, Australia is reviewing their legislation, Singapore, because the covered bond directive has been a bit a benchmark for all the global community. So that's where I think the ECBC can play a role, not only in helping European countries in implementing the directive, but also transforming the directive in a global standard.
Morten, how about you?
Well, I definitely agree with that, and I think it's perhaps a little bit premature to call the directive done and dusted. There is still 10 months to go in the implementation process, and as always, when you implement new legislation, there is also a phase where you need to adapt to the new legal framework. There will be interpretations here and there that needs to be looked at and how should I say, getting used to. So there's also a business side to this for the issuers, and also maybe where you have to look back as a treasury operation, basically how are you going to manage your things when you need to adhere to the new legislation here. So I think there's still a bit of work, both for the individual issuers, but also for the ECBC, leading up to the full implementation deadline in July next year, and perhaps a little bit after that as well.
So Boudewijn, how about you?
A few things to add. I think on the one hand, it's a European directive, and we talk about it for a few years now. But the process, on the one hand, has been quite extensive in terms of preparation together with Brussels, European Commission, European Parliament, to ensure it didn't affect a well-functioning market negatively. That was the first step. Then drafting takes time, implementing takes time, and especially if you take into account the fact that this directive it has an impact on all countries, or maybe all to more or less extent, because everybody needs to ensure even if he has a law in place, and even if he says, well, 99% or maybe 95% is already in place, you still need to check every single point and maybe make a small change. But making a small change or a significant change in the law, you still need to do it. And it's still a process in every single country. And I think it's the first time that we see such basically such a big legal process of enacting the directive in terms of in so many countries at the same time. And you also want to ensure that the implementation is done in a sort of similar fashion between the different countries. So that's, I think, a big process. A lot of it, not everybody sees it, but a lot of work is put in by the Secretariat and by the different stakeholders within the ECBC. But that's now coming to a sort of close to an end, but we still have some months to go, so more to be seen, and especially the announcements in terms of when people have finished the work and it becomes public, that we'll see in the coming months. But it's all looking very good, I would say.
So, yeah, Morten, you said July. So you think when we will convene, hopefully in person in a year's time, we would have been talking about all this in the past tense?
Hopefully.
Yeah.
I mean, there is always the risk that some will be complying with the deadline in the final hours or something like that. But I mean, by and large, I think it will be in the past sense. But as I said before, there is still work going on even after the implementation date. So not necessarily because anybody would be delayed, but simply because you need to figure out some technicalities afterwards. So as you go along.
Of course. Okay. So you obviously do a lot of good work on energy efficient mortgages, starting from your work on the link with default probability, but increasingly across the whole value chain of energy efficiency. What would you like the EU to do as a result of this work? Directive, regulation, or something else?
Well, I think that what we are building is a new way of building the business model from the asset side till the liability side. So this should be captured not in only one piece of legislation, but different of them. We know that there are important pieces of legislation which are upcoming in the European space. Well, first of all, we are implementing Basel III, which is an important pillar that will change the capital charge for most of the banks. And potentially this can be having some reflection about what is the role of the ESG market and energy efficiency mortgages. We will have a revision of the mortgage credit directive. We will have a revision of the EPBD. So I will look at this energy efficiency initiative, or the Bauhaus movement, as we call, where we are proposing something new to the European Commission as a way to address the challenges of the Green Deal and the renovation way, which are all strategic issue for the European Union. It's a new ecosystem. We are proposing a new way to finance the house of people, how to finance the renovation. And we know that the European Union has a huge challenge in front of them. They have to renew or renovate more than 200 million of dwellings. And we can help. We can give a strong support to the European Union to make the quality of life of their citizens more affordable, and they can improve the quality of life of the houses where they live. Mm-hmm. So that's so it's a more transversal issue, which is affecting more different directives and different regulation.
Goodwin.
Yeah, no, I fully agree with Luca. I think it has been more and more a topic on the agenda of politicians of Brussels, and it's not only there but in general, I would say, and it becomes a more important topic because everybody in the end, it's important that globally the climate, etc., the impact of that is important, becomes even more important. And I think as part of that, helping that process, making suggestions in terms of how you can fund, for example, green mortgages, greenhouses, etc., going forward. I think that's where the ECBC as an institution can add value and can support and be part of the discussion. We're not saying that you can suddenly change the whole housing market from one day to the other, because it takes time to do that. And also you need different things in different countries, so you cannot apply one approach that works maybe in the Nordics, where you need insulation, compared to the south of Europe, where you need more air conditioning. right? So it's also these kind of things that are different in different countries. So that you also need to take into account. But it's part, I think, of an additional discussion in which the ECB, ECBC, and EMF take an active part in the discussion.
So, Morten, how's your insulation?
Yeah, it's actually pretty good, I would say, but it could definitely be improved, and I think that's a very, very valid point that Bodeman was making here. That, I mean, in my view, we are now past the point where we discuss climate change as something academic or where you can even debate whether it's real or not. I mean, we are past that, especially with the latest report from the UN climate panel. So now it's time to basically roll up your sleeves and do something about it. And I think we have a role to play there, because there will be a huge financing need. I mean, we finance such a huge part of the building stock through the covered bond system, and also not by other means, but from an ECBC perspective, that is a huge task, and something that we are definitely going to play a part in. So I think we have our work cut out.
Yeah. Well, Luca mentioned at the beginning that obviously there's life, the world outside of Europe. But I think it's fair to say, though, that Europe does lead the world in terms of facilitating energy efficient homes via the financial system. The US is obviously, or hopefully, more open to the concept now, as are many other countries. But what are your global ambitions here, if you have any?
Well, I don't know if global ambition sounds very, very grand, if I may start on this, but I mean, I think to a very large extent, Europe is leading by example, and you can say, if you make the comparison to the covered bond world, the covered bonds are basically a European concept, and you see it being adapted in other countries. And I think we could hope for something similar in the energy efficient arena, where we can lead by example and basically set up a framework that we can then inspire others to look to as well. On the point of the US, I think you should be very, very careful to make broad generalizations about the U.S., because one thing is on the federal level, on the state level, there are the picture is a little bit more varied, and there are good signs there as well. So I think there's also hope for the Americans, but their attitude to resources are just different. I mean, if you have been to the US, you know that when you turn on your shower, first you add all the cold water that you can, and then you add hot water until you get the right temperature, which means you're basically being blasted away with water. I mean, that's the kind of approach to green and the environmental issues. I think there's an attitude thing that needs to change a little bit in the US.
Okay,
all right. Luca, have you ever had a shower in America?
Yeah, a couple of times, but no. Going back to your global point, I think that we, as Energy Efficiency Mortgage Initiative, we have a strong interest from countries like Australia and Brazil, and a lot of activities with the World Bank are there to be used also by other communities. So we want to put our initiative at the service of a global community. Yeah, I mean, of course, every single country is trying to build a strategy in terms of ESG finance and how to reach the targets that Europe anyhow is setting a benchmark for all the other communities. The housing sector can make the difference. Just to give you an example on the European scale, in Europe, the housing system counts for 40% of the pollution of the European Union. So if you have an impact on the housing sector, you actually can have a leverage effect much higher than other sectors. Just to give you a typical stereotypes of the aviation sector, the aviation sector in Europe counts for 3-4% of the pollution. So the housing system, our house, polluted 10 times more than our trip to Mallorca. So, I mean, we have to be very careful that, I mean, we are considering the scale of the challenge that we have in front of us for the housing sector, and that we put our energy where is needed and where we can maximize our effect. And housing is one of the major sectors where we can make the difference.
Mm-hmm.
And this can be a good thing and a bad thing, because it's putting a lot of responsibility on what we are doing and what we are proposing, of course.
Mm. I mean, yeah, you've had real success in Europe, and you mentioned Australia and other places, Brazil. What's the is it a different conversation there? Tell me about that briefly.
Well, I mean, first of all, in Europe we have something which is called energy performance certification. So every single house or new house is supposed to have an indication of the energy consumption. This is not the case outside of the European Union, and this is making the game much more difficult on those countries. We had conversation with Mexico or in South America, where you don't have actually certification house by house. So this is slowing down all the discussion and is putting the attention more on the liability side, so making green bonds instead of building green asset. In Europe, we are lucky because we can build green asset and green liabilities. So it's a lot of potential that we have, and we should leverage on this capacity on moving on the two sides of the balance sheet of a bank. Of course, we have to do some homeworks. We have to do tagging exercise. We have to discover which part of our balance sheet is complying with taxonomy. Taxonomy will be approved by the parliament quite soon. And this is a huge cost for banks. This taxonomy is not a walk in the park. It's something where we have to think exactly which part of our balance sheet will be taxonomy compliant. There are a lot of compliance costs that have to be considered. So we have to find out a way where banks can be part of the solution and can actually help the European Commission to implement the taxonomy package into the market. So this is what we are trying to do.
Just one more question regarding the environment before we move on to something else. But I'm just wondering, from your perspective, how much of an opportunity is COP26 for you guys? Do you think it will be? Do you think it will make a real difference for what you're trying to do?
Well, the world is changing. I think awareness in the political landscape, in the consumer landscape, is, and the COP26 will accelerate this kind of movement. The Paris Agreement changed the financial landscape, let's be honest. I mean, some COP are more successful than others. Yeah. We hope that COP26 will be a success. But I mean, I think that all the preconditions are there. And now no one can turn the face on the other side and pretending that nothing happened. I mean, we have to take our responsibility and propose something. What we are doing as ECBC, we are proposing a very concrete solution to the European Commission, to the World Bank, to IFC, and to the Global Authority. We are here to bring solution on the table.
Yeah. Okay. Just moving on, as promised. A few years ago, we heard a lot about the application of covered bonds to SME loans. With the banking system awash with liquidity, is the concept of ESMs on the back burner for the foreseeable future?
So I started that.
Please do, Edwin.
Yeah, no, I don't think so, not at all. I think the difference is that you better have liquidity when you need it. It's like when your roof is leaking, you better prepare it in advance than putting baskets below to catch the water afterwards. This is a bit the same. It's like you work on it, you prepare it, and you like it to have it in place when you really need it. And of course, in the current situation where central banks have put in a lot of liquidity in general for banks and to support economies, where governments put in place guarantee schemes to help SMEs. So there's already a lot in place. So you could say, well, do you need also sort of covered bond style products, double recourse products to push more liquidity, push more funding in the system? So maybe it means that the current need is less there. But what we're doing here is being part of the discussion again, is to help and set up a potentially product that will cover future needs. In terms of funding SMEs in the market, instead of relying purely on central banks or on government support. Maybe it's not needed in the next 6 months, but maybe it's needed in 2 years' time, and maybe it's needed in some countries, but not in all countries, because SME funding, again, Europe is not one country. It's done in different ways in different countries, and hence you already started the definition discussion and the way that it's applied and different economies. But overall, we part of the discussion. It's still very live, and part of the ESN is also the link maybe with the COVID recovery task force that would place those discussions in terms of how can we maybe add value to that discussion. This is sort of the same. We're trying to add value there. We're trying to be part of the discussion to help see what are solutions for this issue, maybe on the longer term. And that's still very much valid with the ESN task force making good progress there.
Okay, Morten?
Yeah, but no, I totally agree. And I mean, look at the covered bond directive. It was, what do I know, 5-6 years in the making. There are a lot of issues. There are a lot of things that you need to think about to put such a concept in place, like the ESN. And that's the kind of work that we have taken upon us to think about this. How, just a very simple thing. How do you measure eligibility? I mean, on the covered bond side, it's very easy. You look at LTV ratios, but how do you do that on an SME loan that may be unsecured and that kind of thing? So I mean, there are a lot of issues, and as Bodewin said, you may need it down the line, and it's much better to prepare when you have the time for it, and that's what we're doing.
Yeah, Luca, anything to add on ESMs and SMEs?
Well, I think it's also very important when we discuss about covered bond directive to split the concept, and to defend the qualitative aspect of the covered bond, in the sense linked to the mortgage sector. So we face this problem, for example, when we are outside of the European Union, when a lot of countries, they want to implement dual recourse instrument on other kind of collateral. So it's very important to make the distinction between a covered bond as a conservative approach that we see in Europe, and everyone is implementing the covered bond, I would say, with a very conservative approach, and any other kind of dual recourse, which can be called the ESN, which are to a different kind of landscape. We are having this discussion with Brazil, for example, with other countries, and we try to stress this difference. You have covered bonds, and then you have ESN, and can be used for other kind of asset classes. So this is something that we are, I would say, educating the global community to give these two options to them.
Okay, and finally, looking at your starting point, how concerned are you about the state of the European covered bond market? Supply is very low, not as many investors are involved, the market is shrinking. How is your organization adapting to this?
Well, we just received the numbers of the 2020, so it's not the latest numbers, but I mean, we actually reached 2.9 trillion of assets, and I think it was the highest peak on covered bonds outstanding we had since 2012. So you're right. I mean, the market is changing. Investors, of course, are attracted by other kind of asset classes because of this unprecedented fiscal and monetary support that we have. But I think that covered bonds are here to stay, and they will remain an important pillar of the capital markets union. Of course, we are facing an unprecedented period in terms of deposits concentration in the balance sheet of the banks, fiscal support, together with monetary easing, LTRO purchase program, and this is changing appetite for investors. But if they are calling from Kuala Lumpur, from Tokyo, and all are asking about covered bonds, I think that the ECBC has still something to do and a service to provide to this community.
Sure. Morten?
Yeah, no, I think it's important to keep in mind that also that you may think that less investors are involved. Well, why are they not involved? They are basically being forced out of the product because they are seeking yield, and they may not honestly be comfortable with the kind of risks that they are being forced to take. I mean, covered bonds is a super low risk product, and I think to a large extent the investors that have been forced to look elsewhere will basically come back. Some of them, of course, will adapt to higher risk levels, but you can also argue that some may get burned eventually, and and to a large extent they have been forced away from the covered bond product, and I think we have long-term value basically, and I think a lot of people will come back to that. And also, I mean, it varies from country to country, and outside the Eurozone, we see growth in the covered bond market. I mean, I sit here in Copenhagen. Our market is growing quite healthily on the back of a very strong housing market. So I mean, there are differences, and overall, I think as Luke has said, look, it's almost 3,000 billion euros of outstanding covered bonds. It's not going anywhere, or at least not down. And anyway, with the 200 million dwellings that need to be upgraded for energy purposes, I think there will be quite a lot to finance, and a good deal of that will come out of covered bonds.
And yeah, Bodwin, final words from you.
No, I fully agree. I think it's normal that you see in a period where issuance spreads are low and there's a lot of money available, a lot of liquidity, in general credit premiums are low. People will issue more and go for credit, more risky products. And if you have a more price situation with higher spread differentials, automatically people will go more in covered bonds. So it's normal that you see a bit less volume, and you keep your bullets dry for when you really need them. You keep your program active, and that's where next year it may be a different market and maybe completely different volume levels. But I think also the fact that the outstanding is still growing, because also people have issued, for example, longer maturities, longer terms over time. It also means that they may be issuing less now, but need to replace other funding in the coming years.
Okay, well, gentlemen, thank you very much. Luca,
Pleasure.
Morten, and Bodwin, thank you so much for joining me this morning. Great to hear from you. Right, well, ladies and gentlemen, up next we have a keynote with Christoph Rieger, Head of Rates and Credit Research at Commerzbank.